Hi. The market today is highly overvalued on any valuation criteria. Warren Buffett's favorite is the price to revenue, or market capitalization of all stocks to GDP. That is, how much investors are paying today for all the revenues of the economy. Today, they are paying a lot. And on top of the market priciness, there are three risks that make it today particularly scary. The first, the market is being kept in the stratosphere only by a panicky Fed that prints money in amounts not seen since the French Revolution. If the Fed ever stops printing, watch out below. Second, when Trump wins, not if, but when, he won't need the Fed to print anymore to push the market up. What if the Fed stops printing? What then? But third and scariest, as insane amount of money now chases fewer goods, inflation is waking up. And I mean hyperinflation. This might mean that $200 5 years from now could buy you fewer burgers than $100 can buy today. In such a crazy environment, how can you even consider investing in stocks? Yes, their price may go up in number, but the burger buying power could still fall. What to do? Just make sure that your $100 invested today grows to at least 300 or 500 in 5 years, preferably more. How to do it? By sticking to two key points. First, because of the coming hyperinflation, normal market returns of previous years are no longer good enough. You must insist on stocks with the potential to go up multiple times in the next few years, or as Peter Lynch used to call them, multi-beggars. This is both simple and hard. The simple part, don't buy any stock unless you are really convinced it's a multi-bagger, and your conviction is based on something you know, but others don't. The hard part, this something you know cannot be due to clever brain work or tips or learning how to trade or how to read charts. That's the lazy way of those who prefer to stay home and play investing via the internet. These so-called investors are the fish at the poker table whose money you want to take by doing what they don't do, getting physical information on your own. That is sleuthing. How? Simple. Call up companies' clients, employees, suppliers, go visit stores, talk to the competitors, look and learn what really goes on, physically goes on, out of the internet reach. In other words, don't see yourself as a stock scientist interpreting in internet data available to all the fish, but as a street operative generating physical data exclusive only to you. Only then can you find the multi-baggers. Where to find them? How to target your sleuthing? Read my book, The Sleuth Investor. I also gave you a few pointers in previous clips. Look in particular at the clip about ADS, Alliance Data Systems, which, by the way, 2 days ago reported blowout earnings, new customers, a key small acquisitions, and a dividend. The stock is up. It's about $50 today. But in my opinion, it has a chance to get back to the previous high of $280. In other words, a 5-bagger. Will it? I said a chance, not a certainty. Maybe it will, maybe it won't. What do I think? Oh no. I don't give tips or recommendations. Only I mention stocks as examples. You have to do the sleuthing work yourself to find this out. Any other stocks worth your sleuthing time? I mentioned several in the last few months. That should give you plenty of names to chew over as you master the art of stock sleuthing. But all right, let me give you one more name with a high potential. But remember, it's not a recommendation nor a tip, just a name for you to investigate. The stock is FOSL. The ticker symbol is FOSL. FOSL designs, sells, and distributes watches and luxury items, both of its own design and those of others. The stock had a rocky ride going up and down with the economy, and with its product cycle, which usually lasts 3 to 5 years. Last cycle, the stock topped at $134 per share at the peak, then fell to single digits, a plunge, as the company began to close all product lines and shifted to a new online business. At the price of $9, insiders began to buy heavily, even while costs were being slashed and new products were being added. Where's the stock today? It's $6, below what most insiders had bought it. So were the insiders wrong? Maybe. But certainly they were unlucky, because once they had loaded up, COVID hit, revenues melted. The company had to close more stores, sell more inventory, cut more cost, or lay off more employees. The stock tanked further below 5, briefly below 4, where it traded below cash per share, a giveaway. Did insiders sell? No way. They bought even more stock at all levels of the company, directors, executives, and managers. Has the stock gone up since? A bit, but not much, even although the turnaround continues. So why do I think the stock deserves your sleuthing attention? It is time-consuming after all. Because, just like ADS, FOSL has the potential to rise many-fold, perhaps close to its previous peak. If it does, it can become a 10-bagger, perhaps more. That's 10 times today's price. What are the reasons for such a high potential? There are several, but let me focus on 3. A crossover turnaround, the improving financials, and valuation. First, what's a crossover turnaround? As I explained in the previous clip on turnarounds, when a company gets rid of an old product line and goes into a new one, there is a point where the company carries double costs of the old and the new and twin revenues, one declining, the other zooming. So during the crossover, it looks horrible and the company shows losses. But if the new revenue line succeeds after the write-offs, the stock can be a bargain. Is this the case here? Well, to find out, you'll have to invest in the company yourself. Remember, I'm just mentioning it. Second, as for the financials, following store closings and layoffs, costs are much lower, and the company is generating cash and paying down debt, which is not much, by the way, even as revenues on the online side are growing at more than 100% per year, while the old lines are being phased out. 3, potential valuation. Value Line, of which I spoke before, forecast revenue per share for FOSL of $45 a share in 5 years. The peak, just to keep it in mind, was 70, which means they don't even forecast peak earning again. This is what the company has to make EPS from, earnings per share from, based on its net margins. In the past, when net margins were 12%, the stocks traded between 1.5 to 2.5 times revenue per share. If margins ever go back to 12%, the $45 in sales per share will produce EPS, earnings, of $5.40. The stock today may be trading at 1 time future earnings, a PE of 1. Maybe. Moreover, due to the lower cost of an online sales, which is the new business, I think the company has a chance of generating even higher net margins than before, so the stock can make an even higher multiple of revenues in the future. In sum, even at 1.5 to 2 times Value Line revenue estimate, the stock can go to 70 to 90 from about $6 today, maybe in 5 or 6 years. And if it ever generates higher margins and revenues anything like what it did before, the stock has a shot at close to its all-time. That is a multi-bagger. Maybe. What does Value Line think of it? Despite all the above and the turnaround and the massive insider buying, Value Line just dropped coverage of FOSL. Like most analysts, Value Line is scared of uncertainty. In fact, I noticed that Value Line often drops coverage when stocks are cheapest and scariest. It is also called capitulation, when the last holders give up and sell. It's the same thing, by the way, when stocks are taken out of the S&P index or the TSX. Or maybe Value Line is right? Maybe. Insiders, however, disagree. Just as they disagreed in the case of ADS, in both FOSL and ADS, insiders have been massively buying. To sum up, because of higher inflation in the future, don't buy any stock unless you are certain it can give you a multi-bagger return. You need it in the coming days of high inflation. Simply, average return won't be enough. Such certainty can only come from physical sleuthing, yours, not tips or recommendations by others. The information has to be exclusive to you. You find it and you keep your mouth shut and you buy. Physical, not just browsing the internet at leisure. Those who invest based on the internet on information known to all are the ones whose money you want to take. And remember, be obstinate. Buy nothing but multi-baggers in whose potential you are sure based on your work. As Churchill once said, if you insist on nothing but the very best, you very often get it. That's all for today. Let me know in the comment below what you think of the above. Subscribe to the channel. Tell all your friends about it so they subscribe too. I'll see you next time. And meantime, thank you very much for watching.